Imagine making over $1 billion in a single day by betting against one of the most powerful institutions in the world. Sounds crazy, right? Well, that's exactly what legendary investor George Soros did in 1992 when he broke the Bank of England. Today, we'll take a deep dive into the full story of Black Wednesday, a day that shook the financial world and left a lasting mark on the UK's economy and its political landscape. We'll break down every piece of this fascinating puzzle, from the flawed economic policies of the early 1990s to the high-stakes gamble that made Soros a household name. To understand how George Soros was able to exploit a massive weakness in the UK's economy, we first need to go back and understand the system that the British government was working with, the European Exchange Rate Mechanism, or ERM. The ERM was set up in 1979 as part of the European monetary system. Its primary goal was to stabilize the currencies of European countries, keeping exchange rates within a fixed band to limit volatility. This system was a precursor to the euro, the single currency that many European nations use today. At the heart of the ERM was the idea that European economies should be more closely integrated. Countries would peg their currencies to a central currency, largely the Deutsche Mark, Germany's currency at the time. The Deutsche Mark was seen as the strongest, most stable currency in Europe, thanks to Germany's robust economy and fiscal discipline. In theory, keeping other currencies within a narrow trading range against the Deutsche Mark would help stabilize Europe's overall economy. But not every country was ready for the ERM's constraints. The UK, in particular, had a difficult time with the system. Britain entered the ERM in 1990 under the leadership of Prime Minister John Major and his Chancellor of the Exchequer, Norman Lamont. The government believed that by joining the ERM, it would help control inflation and strengthen the British economy in the long term. However, from the outset, there were problems. At the time, the UK's economy was in a state of stagnation and recession. The country had been hit hard by the global slowdown, and unemployment was on the rise. On top of this, inflation had become a serious problem, eroding the purchasing power of the average Briton. The Conservative government was struggling to find a way out of the economic slump. One of the key requirements of the ERM was that member countries had to maintain their currencies within a narrow band of exchange rates relative to the Deutsche Mark. For the UK, this meant maintaining a high value for the British pound. To do that, the government had to keep interest rates high to attract investors and defend the pound's value. But these high interest rates also made borrowing more expensive for businesses and consumers, which further stifled economic growth. As Prime Minister John Major's government tried to balance these competing economic forces, tensions grew. While the ERM was designed to bring stability, it was having the opposite effect on Britain. The high interest rates necessary to keep the pound strong were hurting the real economy, leading to rising unemployment and frustration across the country. At the same time, inflation remained stubbornly high. Despite the government's best efforts, it was clear that something had to give. For Soros and other currency traders watching this unfold, the situation presented an opportunity. They saw that the UK's economy simply couldn't sustain the strong pound that the ERM required. Let's pause for a moment and talk about the man at the center of this story, George Soros. Who is he and how did he become the investor who took on the Bank of England? Soros was born in 1930 in Hungary, where he survived the Nazi occupation during World War II. After the war, he fled to England and eventually graduated from the London School of Economics. It was here that he was deeply influenced by philosopher Karl Popper's ideas on open societies, which would later guide his philanthropic work. Soros didn't start out as a financial titan. In fact, he struggled in his early career, working various jobs in merchant banks before establishing his own hedge fund in 1969. That fund, which would later become known as the Quantum Fund, grew into one of the most successful hedge funds in history. Through the Quantum Fund, Soros made his fortune by speculating on macroeconomic trends. His approach was different from many other investors. He wasn't interested in individual companies or industries. Instead, Soros looked at global economic imbalances and placed big bets on currencies, bonds, and commodities. By the early 1990s, Soros had already established a reputation as one of the smartest and boldest investors in the world. But he was also someone who understood the power of governments and central banks. He knew that when governments tried to control currency markets, there were often cracks in their policies that could be exploited. And that's exactly what he saw in the UK's participation in the ERM. Now let's break down exactly what Soros did and how he made such an enormous profit. It all comes down to something called short selling, a technique that allows investors to profit from a fall in the price of an asset, in this case, the British pound. Short selling is a strategy where an investor borrows an asset, sells it at the current market price, and hopes to buy it back later at a lower price. When the asset's price falls, the investor buys it back at the lower price, returns the borrowed asset, and pockets the difference as profit. In the lead-up to Black Wednesday, Soros and his team at the Quantum Fund were watching the UK's economy closely. They believed that the pound was massively overvalued and that the British government wouldn't be able to maintain its fixed exchange rate within the ERM. Soros began to build a massive short position against the pound, borrowing pounds, selling them for other currencies like the Deutsche Mark, and waiting for the inevitable fall. Soros wasn't the only one to see the writing on the wall. Other investors and currency speculators started to do the same thing, creating a snowball effect that would eventually overwhelm the Bank of England. As more investors began betting against the pound, the British government found itself in a dangerous situation. In order to defend the value of the pound, the Bank of England had to use its foreign currency reserves to buy pounds on the open market. But this strategy could only work for so long. The more the Bank of England bought, the more pressure built up in the market, and the more expensive it became to keep defending the pound. At the same time, the government tried to raise interest rates to make holding pounds more attractive. On Black Wednesday, they raised interest rates from 10% to 12% and then to 15% within hours. But even these drastic measures weren't enough. On the morning of September 16, 1992, what we now call Black Wednesday, the British government was in full crisis mode. The Bank of England was using billions of pounds worth of its foreign exchange reserves to buy up pounds and keep the currency within the ERM limits. At the same time, the government raised interest rates sharply, hoping to calm the markets. But these efforts only had a temporary effect. Soros and other speculators kept selling off pounds, confident that the Bank of England wouldn't be able to hold out much longer. By midday, the pressure on the pound was becoming unbearable. The Bank of England had already spent billions of pounds trying to prop up its value, but the tide of market forces was too strong. Every time the bank bought pounds, it seemed like even more were being sold by speculators. At this point, Soros and his team were ramping up their position. Soros reportedly placed a $10 billion bet against the pound, an enormous sum, even by today's standards. But Soros was confident that the British government couldn't win this fight. By the end of the day, it was clear that the Bank of England had lost. In the early evening, the UK government announced that it would withdraw from the ERM, allowing the pound to float freely on the open market. The value of the pound plummeted, falling by more than 15% against the Deutsche Mark and other currencies. For George Soros, the gamble had paid off. By shorting the pound at its peak and buying it back at its lower value after the government's capitulation, Soros made over $1 billion in profits in a single day. But for the British government, Black Wednesday was a disaster. Not only had they lost billions of pounds trying to defend the currency, but the public humiliation of withdrawing from the ERM was a political catastrophe. Prime Minister John Major and Chancellor Norman Lamont faced intense criticism for their handling of the crisis, and the Conservative Party's reputation suffered for years to come. In the immediate aftermath of Black Wednesday, the UK's economy went through a significant period of adjustment. Ironically, the collapse of the pound and the country's exit from the ERM ended up benefiting the British economy in the long term. With the pound no longer artificially overvalued, British exports became more competitive and the economy began to recover. But politically, the damage was done. The Conservative Party, which had been in power for over a decade, lost much of its credibility when it came to managing the economy. The failure to defend the pound was seen as a symbol of the government's broader economic mismanagement, and it contributed to the party's eventual defeat in the 1997 general election, which brought Tony Blair and the Labour Party to power. For Soros, the victory cemented his reputation as one of the world's greatest investors. The quantum fund's success on Black Wednesday was widely reported, and Soros became known as the man who broke the Bank of England. Since Black Wednesday, George Soros has continued to be a major figure in both the financial world and global politics, but his role as a financial speculator is just one part of his story. In the decades that followed, Soros turned much of his attention to philanthropy and political activism. Through his Open Society foundations, Soros has donated billions of dollars to support democracy, human rights, education, and social justice causes around the world. His work has had a major impact, particularly in former communist countries in Eastern Europe, where he has helped promote democratic reforms. But with that influence has also come controversy. Soros has been the target of numerous conspiracy theories and political attacks, particularly from far-right groups who accuse him of using his wealth to manipulate global politics. Despite these accusations, Soros remains committed to his vision of an open society, one that is based on democratic principles, human rights, and freedom of expression. While his role in Black Wednesday made him famous or infamous, Soros' impact goes far beyond the world of finance. He continues to be one of the most influential figures in both global economics and international politics. So, what can we learn from Black Wednesday today? More than 30 years later, the events of that day still offer valuable lessons for investors, governments, and economists alike. One of the key takeaways from Black Wednesday is the danger of fixed exchange rate systems. When governments try to peg their currencies to others without the economic fundamentals to support them, they open themselves up to speculative attacks. This is particularly true in a globalized world where financial markets can move billions of dollars in a matter of minutes. Another lesson is the power of market forces over government policy. Despite the UK government's best efforts to defend the pound, it was ultimately the collective actions of thousands of traders and speculators, including George Soros, that determined the currency's fate. Today's financial markets are more interconnected than ever, and currency speculation remains a powerful force. But central banks and governments have learned from the mistakes of the past. Most major economies now allow their currencies to float freely, avoiding the kind of rigid exchange rate mechanisms that led to Black Wednesday. In the end, Black Wednesday was a pivotal moment in both British and global financial history. It exposed the flaws in the European exchange rate mechanism and highlighted the immense power of global financial markets. George Soros' success on that day made him a legend in the investment world, but it also raised important questions about the role of currency speculation and the influence of wealthy individuals in shaping national economies. As we've seen, the effects of Black Wednesday extended far beyond the financial markets. It reshaped British politics, influenced the development of the European Union, and left a lasting mark on global finance. And for George Soros, it solidified his place in history as both a financial genius and a controversial figure. Thank you for joining me on this deep dive into the story of how George Soros broke the Bank of England. If you enjoyed this video, don't forget to like, subscribe, and leave a comment below. Let me know what other financial events you'd like to learn about next.